All right, so what is the 23.231 exemption?
Okay. So that is an interesting thing that came about this year. Previously, homestead properties were the only ones that had any kind of cap, right? So the circuit breaker limitation is basically a 20% cap. Just like the homestead cap is 10%, this is 20%. Right. In order to qualify for it, you have to own the property on the preceding January 1 and the following January 1, right? So if I bought a property in May, I'm not going to qualify for the circuit breaker for 25. Does that make sense?
Right. And that circuit breaker is going to cap the gain. So the gain in appraised
the assessed value. The assessed value.
Or,
yeah. Because there's a difference.
Between assessed and appraised?
Depends on what you mean by appraised. If appraised and assessed typically can be synonymous, but like assessed is essentially what you're taxed on. Your taxable value and assessed value are the same.
Okay, so with that circuit breaker, we can only increase a commercial property's assessed value by 20%.
By 20%, unless you build new value into it.
Okay,
right?
And so if you build new value, do we still have to put that 20% cap on the old value and then just add the new value, or is everything off? I could go up 40% because I did a 10% improvement.
Right.
Can I go up 40%? I'm starting all over again?
Right. So let's talk about new value. Let's say my property was worth $100,000 last year.
Right.
And I built on an addition that was $40,000. Okay. And then market values increased another $20,000. So we're now without my addition, property be worth, well, let's say 130. So because otherwise it wouldn't cap anything. So let's say market values raised my $100,000 value to $130,000, and then I added $40,000 new improvement, right? So $20,000 from the cap is going to go into the assessed value, and then $10,000 of that is going to go into the circuit breaker limitation line, and then my new value of $40,000 is going to go in there. So my taxes would increase by that $160,000.
So the circuit breaker still helps on the old appraised value.
100%.
Still keeps that old appraised value from going up, but I'm going to pay whatever the
new value,
market value is. Okay.
Right. Now, you talked earlier about how one of those things, how can we benefit, talking about conditions and what, if you build something new, that's another thing that you can be proactive about. Like, hey, it cost me X amount of dollars to build this, right? Because we're going to make assumptions based upon market data, upon cost schedules and things like that. So, if maybe the exterior quality is better, but the interior quality is not as good, and we can't see that unless you show us. We don't know. Mm-hmm. Hey, yeah, we spent $30,000 this instead of 10 because we don't have these kind of things on the inside of it. Let us know.
For 2025. Are commercial appraised values expected to increase, decrease, and by what percentage?
Okay, that's a good question. I wish I could break out my crystal ball and tell you an exact answer, but I can't. We are still analyzing data. There's a lot of market activity that happens in the last quarter of the year. So we need that before we can make an accurate assessment. And we also will look at some sales just after the first, because that's also a pretty clear indication of market, right? So we need all that data before we can make an accurate assessment. Also, we do know that there are some pockets in the area that we might have to look at our land. We haven't adjusted land schedules in a while. We know that we're probably too low, so we'll probably have to look at those. But again, we've got to analyze that data first. I can say that we did not increase much from 24 to 25. Right, I'm sorry, from 23 to 24, the market plateau, which we were eternally grateful for. And we haven't yet seen an overall increase yet. So again, if there's going to be an increase, it will be pocket areas and not overall.
I want to circle back to short-term rentals. And earlier you said that my understanding is they're paying a hotel tax, right? But most likely they're actually being appraised as though they're residential because that's going to be the best comp for sales to get to the market value. Is that right?
Right. Highest and best use is always a question we have to ask in appraisal property. So if you had a market that was saturated with sales of properties that were selling one home buyer to another home buyer, and your property fits that description, again, because most of these short-term rentals we're talking about are actually residential properties that are used to drive income. If the highest and best use of that property is to sell it to someone who's going to buy it as a house and live in it, and because we're in a housing shortage, then yeah, that's probably the way it's going to be appraised, is what's the highest and best use of it. Because even though someone were to use it as an investment, well, I don't know if that's the best return for my investment, it doesn't mean that you couldn't turn around and still sell it at the market value we've got it appraised at, which is what we're ultimately concerned with.
So we were talking about which cap rates, if we were going to bring you a commercial income approached valuation on our commercial property, which cap rates would you recommend in Wise County? Where do we go to find a cap rate that you would consider?
So not everybody's going to pay for CoStar. So I would be my first go-to is go to CoStar. But it costs to do that. But you can do some research online. Dallas Fort Worth MSA, office cap rates, medical office cap rates, industrial cap rates, apartment cap rates. I mean, there's all kinds of information out there, and I'm a big fan of AI. I use it quite a bit. There's a new thing out there called Perplexity AI. You can actually ask your question on that website, and it will actually give you sources. So if you're not very good at Googling, but you want those sources, you can say, what are the market data for this type of property in the DFW, and it'll give you a list, and you can look at the resources for it. It's pretty cool.
Okay, perfect.
Nice. Do you know if the state of Texas offers any tax assistance or exemptions to commercial taxpayers in addition to what we've spoken about already?
Man, as far as I know, the only remedy for commercial commercial property is that circuit breaker. And again, that only applies for properties that are $5 million or less. So that's something to consider as well.
Okay.
Yeah, no, there's no exemptions that you can. But the good news is you don't have to apply for that circuit breaker.
Right.
Whereas with a homestead, you have to apply for it.
So most commercial property owners in Wise County, if their valuation has gone up more than 20%, they'll see that on their appraised value for the taxes that are due.
That's right.
Now.
That's right. And that includes, let's say you successfully protested your property in a preceding year, okay? And that value has not gone up, right? Then your cap is going to come into play, right? So if you reduce your property value by 30% or more through protesting it, and that value has come off, and that value is capped.
Does property tax reset if it transfers owners? So, for example, someone passes away and they inherit a property. How is that reassessed?
So it won't happen the tax year of. I like examples. It's kind of the way if I was over 65 and I own the property as of January 1 of 2025. And I die in February. My wife has already gone, let's say, and my kids are inheriting that property. Well, my kids will still reap the benefit of that exemption for 2025 because it was in place as of January 1.
Okay.
But for the next year, it's coming off.
Right. And is the entire value reassessed at that point, that next cycle?
We can reappraise property every 2 years. So the market value has gone up. So keep in mind that's not going to be affected. But what will affect people is if there was a significant cap, that will automatically go down to the taxable value. And the over 65 exemption will be removed, which means a lot of times those freezes come with a freeze on tax rates.
Right.
And a homestead exemption might be removed too, right?
Absolutely. If you're a new owner and you buy something that has agricultural exemption, if you don't reapply for it, you lose it.
Right.
So anything you have to apply for will. And the commercial property, if you buy a property in February, and of 24, in 2025, you're not going to get the benefit of the circuit breaker limitation. And if there was value held in that circuit breaker limitation it's going to go into the taxable value.
So you would see a significant increase in that case.
The last couple questions really would just be, what questions have we not asked? What questions are you most frequently asked at your office by taxpayers?
A lot of times they ask, like y'all have asked, what do we do to protest? What documentation do we need? Am I eligible for this particular exemption? We get that a lot. What do I need to bring in? I don't know that there's anything that I can think of off the top of my head that they have asked that you haven't covered. You've been very thorough.
Well, great. And any advice that you would have for a commercial or even a residential taxpayer? What in your situation, if you were in their shoes, what would you do?
Okay, great. I will say that if you're a new home buyer, make sure that you file for your homestead. It doesn't come out. And one of the things I've run into with taxpayers before is they thought that when they closed on their house, that document was filled out, and it's not.
Mm-hmm. Right.
You have to apply for that. And I bought my house in Alvord in 2008, and I had no idea any of this stuff. So I sat without a homestead exemption for, 3 or 4 years until someone said, you should do that. So I went in. So it doesn't happen automatically. You have to do that. So make sure you file for your homestead. If you have agricultural, if you bought a property that had an ag exemption, make sure that you file for it, because just because it had it doesn't mean it carries over. Make sure that you do that.
And with the homestead exemption, if you realize, oh no, I forgot to file,
it goes back.
It goes back how many years?
I think it's 2.
2
It used to be 5, but I think they made it 2.
And what about the agricultural exemption?
So the rule is you have to have ag for 5 out of 7 years. So if you, let's say you bought your property in 2024, that exemption popped off for 25, and you forgot to apply for 25. You'll notice that when you get your notice of appraised value in, for sure. You can late file. April 15th is a deadline for ag, but if you don't file by the time we certify, you're not getting it for that year. Just doesn't happen.
And you can't go back and
go back retroactively. No.
Okay.
So, but if you filed in 26 because you had history, you should be okay. But if you 25, 26, and then forgot one more year, you're going to have to build history again.
And it's got to be 5 out of 7 years.
Right, and that's not. We used to think it was okay. 1, 2, 3, 4, 5. We can give it to you. No, 6 year.
Okay.
So it's important that you make sure you.
Yeah, it's a significant exemption.
Yes, it really is. So, other advice I would tell you is, call your appraiser if you have questions. I know there's this whole joke about I'm from the government, I'm here to help. But we really do want taxpayers to understand. And we don't know everything. I mean, you're going to catch me on tape saying this, but we do make mistakes, right? There are things that we miss. We don't know what the inside of your property looks like. If you don't tell us, we don't know. Because we're mass appraisal, we have to make assumptions. We just have to. So if there's something specific about your property that we can't see from the outside, you got to let us know. And like we've talked about earlier, you don't have to wait until protest season to do that.
On commercial property, you're comparing sales in the area. What's the area for Wise County?
We definitely want to try to concentrate as much as Wise County as we can. But let's say we have a bunch of properties in Northwest ISD, which is a very hot market, right? We're not going to say that a property, even if it's identical in Northwest, is going to sell the same as Chico, right?
Right.
The markets are vastly different. Okay, so we analyze commercial and real and residential on a scale. It's always neighborhood, school district, Wise County.
And if there are no sales comps for a specific type of property, and the reason I say commercial is that would be more likely.
Yes.
To not have commercial sales comps, then you're going to look at cost replacement.
Cost replacement. And again, like mini warehouses and things like that, it's pretty much the income approach on that. Because one of the things that I run across is people who, you bought it in 25 and you're concerned what taxes you're going to pay. And I would recommend, because I'm a believer in capital costs, if you buy a property for a certain amount of dollars, you should definitely kind of figure out, based upon last year's tax rates, what can I potentially expect to pay? And I think that's something that people should do. Realtors don't like me saying that because they may back out of a property because they realize the taxes are too much. Because the problem is that people look at, say if you bought a property that's over 65, you think that's what you're going to pay, and that's not necessarily the case. So it's always better to kind of go, I bought my property for X amount of dollars, let's apply the tax rate to that. Even you may get the benefit of an exemption, may get the benefit of a cap, but knowing what you can potentially pay and making an informed decision when you purchase it is probably a good thing to do.
Right.
Yeah, definitely.
And there's no guarantee if you got a great deal on a property that you can multiply that great deal times the tax rate, and that's what you'll pay. They're still going to mark it up to what you should have paid.
Yeah, I mean, if that great deal is the market, then yeah. But if it's, you bought it from your brother, maybe not.
Right.
So if that's the case, you got a great deal on their property, it was in horrible condition, so that they don't mark it up to market value, you need to bring photos.
And remember, January 1's the day. So if you bought it in August and we had to buy January 1, don't expect to.
Right. But you bought it in December, it's in terrible condition.
And you haven't fixed it yet? Absolutely. Okay. Hey, here's why it costs less. I've seen so many people win their protest because of that. And it's hard for me to advocate against that. I'm like, it is what it is,
So maybe you would bring photos and estimates on what 100%. It will cost to repair and bring it up to.
Sure. If you don't bring it to us, if you wait till protest season, bring it to the panel. But yeah, I mean, if there's a rationale behind why you got it for less.
Okay, so a lot of times we will see somebody buys a property, it's in terrible conditions, maybe they're going to do a remodel on it, maybe they bought it in December, they haven't repaired it by January. The appraisal district, if you don't notify them, is still going to value it, even maybe you paid $200, they're going to value it at $250, $300. Because that's what all the houses in the neighborhood are selling for. If that's the case, you need to get in there and what type of documentation would you want to use to support why you paid a lower price and why it should be valued, the appraised value should be a lower price.
Okay. You would want to bring in your pictures of the property showing like, hey, the conditions on the inside didn't reflect the outside, or we're going to rehab this and here is what it's going to cost. And again, cost to cure, not cost to improve, but yes.
So I bought a house that was 20 years old. I've got to take all the carpet, all the appliances. Is that rehab or is that improvement?
So if the reason why you bought it for less is because it was in that condition, then I think that's an argument that you could make.
Okay. And the most effective way to do that is make that argument before you get that appraised value.
If you can. And in the worst case scenario, if you can't come to an agreement with your appraiser, file a protest.
Okay. So. And if you filed a protest, any idea what percentage of those protests that actually go to the appraisal review board, what percentage would you say are successful protests?
Boy, I really could not answer that question.
Okay.
I do know that if you come in, let me put it this way. I've rarely seen a taxpayer come in with sufficient evidence to prove that there's condition and not get a reduction.
Okay.
Right? I mean, that's rarely the case. The only time I've ever seen that is because they came in and that wasn't conditioned as of January 1. Right? That's about the only time I've ever seen that. Or they fixed it before January 1, one of those two things. But if that's a condition as of January 1, the board's going to rule in your favor typically. And honestly, if you file a protest and you can get us that estimates beforehand, I mean, we don't want to go before the board for something like that. We'd rather settle it if we can. So.
And you can submit that evidence online
Absolutely.
as well.
Yep. And if you check informal, that's another thing we didn't talk about for the appraisal process or for the protest process. If you want an appraiser to contact you before your hearing, check the informal box. We are required by law to meet with you with informal. Now, that informal process may be an email or a phone call, not necessarily in person, but we'll contact you. We'll say, hey, what do you got? What is it that you think affects your value? But again, as we've talked about, if there's conditions, it's better to get that to us beforehand.
Right. So the big thing is the difference between an improvement versus...
Right. So like if your carpet has holes in it,
right,
or it's ratty or your walls have holes in them, not like, you know what, I want to put a new splash of paint and I don't like that carpet. That's not the same.
Right.
And there is the argument too, and I've seen this as well, where we may have an effective year higher than what that property, because we don't know what the inside is, because we look at what properties have sold for,
right, and
updating the effective year is a way to kind of help us manage those values. But there are occasions where, again, because we're master appraisal, there's maybe this house hasn't been updated in 20 years.
Right.
Here's proof.
So what would be a good cutoff? If I can say, well, my house has not been improved in 10 years. Do I need to go 10 years, 15 years, 20 years?
You feel like is valid, bring it. Right? I can't say for certain one way or another, because if we haven't updated the effective year much, like if we have an effective year of 1995 and you have a date in 10 years, we're probably okay. But if we have your effective year of 2010 and the house is the same as it was in 1995, then that's a valid argument.
And where would we find that effective year?
If you go online, I believe you can see it on your website. It'll have like effective year, and it'll show that on there. Or you can always call and ask us for your appraisal card. We'll send it to you.
Well, Josh, thanks so much for coming in. This was great info. I'm sure our listeners are going to learn a lot. I know I did.
If you found today's video helpful, please give us a thumbs up, consider subscribing and leaving a comment below. And as always, thanks so much for tuning in.